Good afternoon, everyone. Welcome to the 310 panel. This is the good one. This is the one on the biggest question there is in fintech, which is the collaboration, or the lack thereof, between fintech startups and the big banks, the not-so-big banks, let's say the financial services industry. This is at the heart of the whole proposition, and we have a wonderful panel coming at it from all different angles, and for the next 50 minutes, we're going to unpack what this process looks like now. My name is Edward Robinson. I'm a writer with Bloomberg News. I started covering fintech in London in about 2013, 2014, when the term first started to be used. And we've kind of watched, from a storytelling perspective, we've watched this story evolve from the early days of fintech was about the revolutionaries who are going to storm the castle, and they're going to take down these big banks that wrecked the world in 2008. And then it kind of mellowed out, and it became, well, actually, the banks have a lot of assets and market share, and they've got that regulatory relationship, which I guess is kind of important, and maybe we should work with them. And I think the story eased into more of a, I don't know if it's collaborative, but it was more this frenemy type of relationship between the fintechs and the banks. And we saw a lot of accelerators start and a lot of processes start where the banks started to kind of shake off their isolation and really say, hey, we don't know everything. Maybe we should talk to some of these crazy entrepreneurs and their crazy ideas. Now we've moved into something else. And this next phase, which we're going to unpack this afternoon, is really fascinating because it's kind of a mix. There's still a lot of competition. There's still some revolutionaries who want to take down the castle. But there's also now finally case studies of collaborations that are working. And I'm just so pleased that we have a panel here of entrepreneurs, the banking industry, as well as what I'm calling kind of the Switzerland of fintech, and that's Mastercard. And Johan from Mastercard, I think he has this unique position because you move through all of the spheres in this space through your business. You have so many touch points in this space. And I thought perhaps we could begin with you, if you could just give us your perspective on where the story is now insofar as collaboration between startups, fintech, and the banking customers, the partners that you deal with. Help us understand the landscape to begin.
Absolutely. Thank you. And I've got an hour and a half, right, for this?
Yeah, that's right. This is phase one. We'll do part two tomorrow.
Very good. So I really like this topic of collaboration because very often when you talk about innovation and fintech, it's all about what you do. Building new e-commerce wallets, new authentication solutions, new whatever, clever technology. But I actually think that this is probably less interesting than the angle of who you work with. And if we take a look at us, Mastercard, as a business, this aspect of our business has changed dramatically in just the last 5 or maybe 10 years. If you go back as long as 10 years ago, we really worked with 2 types of entities, issuing banks and acquiring banks. If you're not one of those, we don't work with you. It's very, very nice and simple. Now, this is dramatically different. We now work with, of course, the likes of Google, Apple, Samsung to build their payment solutions or to support their payment solutions. We work with startups on a very large scale these days, in part perhaps as a recognition of the fact that us on our own, no matter how global or large we might be, we can't build everything. We can't anticipate every new product and service that might come up and that might be important. So maybe just to touch on the startup engagement piece specifically, because we are here today at a startup-focused event. We now run something that's called StartPath that we've been running for 2 or 3 years, I think, that brings in mature startups from around the globe, and we try to find different ways of providing support to them. So we introduce them internally. We introduce them to our customers. We provide expertise, and in some cases, investment, of course, as well. And out of this, we're getting some tremendous results. So just during last year, I know we ran over 30 individual projects together with these startups that came in through StartPath. I think there's several of our StartPath companies here today. I know Revolut were on the stage earlier.
Revolut went through your program?
Revolut were part of it, yes.
Excellent. Okay.
And I know we have the guys from PayKey are here as well. I've done some really interesting stuff with some of our customers. So we're finding this very, very valuable to us as a business.
I see. Tamaz, I don't know if you must all be familiar with Raisin, but if you're not, it brokers deposits. It's a really intriguing and groundbreaking model in the fintech space, which really kind of captures, in a very real sense, what the European Union's banking union was aimed toward, and all of a sudden now it's happening thanks to your platform. Just tell us a little bit about Raisin, and share with us, if you could, about the importance of your relationships with banks and how you've actually cultivated banks as customers.
Yeah, sure. So Raisin is a Europe-wide marketplace for savings. So actually we connect end users, consumers, both businesses and private individuals with banks. So we have currently 40 banks offering their products through us. So it's a completely integrated experience. So a customer opens an account and has access to a variety of banks across Europe. And we do it directly towards the customer. We do it also through third parties. Like, for example, N26 Savings is a partnership with us together. So it's a white label solution of us, which we offer to third parties as well. So it's at the end in a extreme solution. It's actually a bank offering its clients access through us as a white label partner to other banks. So it's what open banking is about, and open banking Europe-wide. I think we're one of the very few solutions which are available throughout Europe. Through our Raisin.com, we onboard customers from 29 countries currently. So yeah, that's the story. So the whole business model is built around partnerships. So it was very hard to get the first partner in a marketplace where you don't have to offer anything beyond an idea and a very initial funding, which is probably not enough for the first year. It is very hard to persuade the first partner to join it. But after that...
what was the response from lenders? When you went to talk to them and say, hey, I've got this crazy business model, check this out, what was the response? So
the most honest I had with a large bank in northern Italy. And they said, you know what, we love the idea, we would actually instantly do it. Come back to us once you have 1 billion euro in deposits. So... and yeah, so that was honest one. The other says, yeah, we're like really excited. Please update us when you're closer to the launch and show us your first 5 partners. And so it's quite natural. Now, when does it work and when does it not work? So I think because fintechs are about simplicity, it's of course very simple to say, like, let's outsource everything from sales and acquisition towards KYC and towards the product, everything to banks, and we just do like connecting through APIs and it's all fun. The real world doesn't work like that. So it has to be, first thing is a clear value proposition to both parties. So I think the things that clearly do not work when it's just for innovation or just for the sake of the partnership. So it has to be a clear value add in terms of dollars and euros on both sides. So the banks which are working with us are saving money because their own solution will be more expensive for them. And our pricing scheme is the way that there is no fixed cost. It's just a variable pricing and it's tap on, tap off. So it's a really no regrets. If they do business, they pay. If they don't do the business, it's just an additional channel. The second thing which we found very interesting is it's actually clear-cut proposition, and then it's also the size, because the size has to match. So it never works out if a small player is partnering up with a very large player, because one side loses the focus or the other side is overwhelmed. So if everything works out. If nothing works out, then then of course it's no regret about that. But if it works out, then one of the sides is either overwhelmed or the other side is actually not performing well, so it's not relevant for them. So the sizes have to match up. We're right now at 5 billion or exceeded 5 billion, so our size increases, we'll get more relevant. That's why the number of partnerships and the scale increases. And the last thing, it's about technology. I think for many of the players, we've been also a bit of a technology playground. So just to see how APIs work, just to integrate. We're testing partner with Verimi, which is the single identity provider in Germany. We do a lot of these things. We give out also APIs for testing, just as is, without a business case behind it. So that the others have something out of it, even without a business case behind that.
Okay. Teppo, you are the head of new digital businesses at BBVA, the Spanish bank, which has been really at the forefront of embracing fintech and really getting after it when other banks didn't even know what it was. Share with us, if you could, just how you've changed your relationship in working with startups now that you've been doing it for several years. And then if you could kind of segue into what the advent of PSD2, the Payment Services Directive that's now come in January, how does that change what it is that you do? I mean, how does that change your relationship with startups? Because as a result of that law, banks in the EU are now going to have to share their customer data with qualified fintechs and other providers, and that's kind of a seismic event that's really changing the marketplace.
All right, that's a lot. I sit in the kind of the fintech side of the bank, so maybe I'm a little bit biased towards the fintechs. There's several different roles of what this relationship could be. One is the traditional, which kind of was before this wave of, oh, they're going to take our customers, which banks have always been using technology, and usually that comes from either smaller or bigger technology companies. So those relationships have existed for a long time. Now, that hasn't gone away. It is still needed. You need to do it maybe a little bit differently these days, because you want to be faster than in the past. The challenge with this kind of a vendor relationship is basically the risk appetite, the compliance, all of that, which is maybe sort of from a fintech's perspective, it looks like a very, very big activity inside the bank, a big and a slow one, and in the worst cases, then the bank looks at the fintech as, well, why don't you get it? And actually, one of the things we do in our group is the people we hire, we try to combine. So typically, the best profiles are people who have worked for both a startup as well as a big company.